Good morning and thanks so much for tuning in. You're watching Trade Talk on BQ Prime. My name is Alex Matthew and with me is Hiral Dadia. Morning, Hiral.
Good morning, Alex.
We saw quite a decisive move yesterday and that was building on the strength that we saw at the end of last week. And the Nifty 50 breaching that 19,500 mark on the upside. You saw support from metals, you saw support from IT, and the PSU banking names also were in focus.
Absolutely. A good V-shaped recovery is what we saw in intraday trade. Now, overall, if you go to see clearly, Alex has just mentioned the sectors that were in focus. The put writers are actually seeing strength at positions of 19,500. So that's going to be a key level to give you a decisive pact in terms of what direction the markets take as well. If you see in terms of the FPIs, which is a key from here on, they are holding more long positions as compared to short positions. So that's one of the key that we are watching out for. In fact, yesterday we did speak to Rahul Sharma of JM Financial as well, who is looking at a 1,000-point rally from a Friday close in terms of Nifty 50, and that will take us to levels of little over 20,400. Again, it's going to be the large caps which are going to help us in this rally is what he has been indicating. Overall, if you go to see the break above yesterday's high of 19,545, that is something which will take Nifty to the next level of around 19,600. So watch out for these levels pretty closely in trade. Clearly, in terms of Bank Nifty, 44,500 strike is a crucial one to watch out for because both your call writers as well as your put writers are playing out at this level. And the option activity at 44,500 again will provide you a direction in terms of the direction today. Moving on, if you see in terms of the highest put OI on Nifty, that's at 19,400, whereas the highest call OI is at 19,600 as well. A couple of stocks that we need to watch out for in today's session on the back of volumes and, a good open interest build-up that we saw yesterday are names like Shree Cement, Balrampur Chini, Coal India, Nalco, as well as Samvardhana Motherson. In fact, sugar stocks have continued the up move as well in yesterday's session. Let's see if that up move continues today. Apart from this, railway companies, PSUs, all of them have been in focus as well with the kind of run-up that we've already seen, Alex.
Oh, certainly. And in fact, that is the focus of the first chat we have lined up today, the railway pack. In yesterday's session, 8 out of the 10 stocks that we've been tracking were up in trade. And how, right? You saw a few names that were reacting on account of large trades. IRFC, I think one of them ended up at a 20% upper circuit. You had RVNL that was buzzing in trade.
So it was all your non-wagon manufacturers which were actually in the limelight in yesterday's session.
So, but let's talk about this, right? Because over the last month, this entire pack has run up very substantially. Of course, there is potential in the space. And a lot of these companies, especially the wagon manufacturers, have displayed a significant increase in the order book over the last several months. But let's talk about where things stand right now. We've got Harshit Kapadia of Elara Capital joining in to give us some perspective. Harshit, thanks so much for joining us on BQ Prime. Could you give us a sense of how you're looking at this basket of stocks? What would you say justifies the kind of run-up that we have had over the last month or so specifically? Because a lot of these have seen, 20% plus numbers in terms of price appreciation. And what, according to you, is the most important factor to watch in this pack?
Hi, morning, Alex. So what has happened is largely a lot of order potential has risen in this sector with government giving a railway capex budget of 2.4 lakh crore. We are now seeing a run-up in terms of order inflow momentum, which is catching up for across railway sector, starting from EPC being one of the segment. Hence, we saw Aircon, RVNL, rights, inching up in their order inflow as well as in the price level as well. Secondly, on the rolling stock side, we see wagons, we see passenger coaches, which is Vande Bharat order being very strong. There are few more tenders in the pipeline. That is also giving a lot of traction to these, wagon names like Tatagar Wagons, Texmaco, even Jupiter Wagons, to that extent, who's having a run-up.
Right. So, Harshit, overall, yes, as you mentioned, the railway budget of 2.4 lakh crores was the one which actually started giving it an impetus. After that, you've seen the new production-linked incentive scheme that has come in, the Amrit Bharat Station scheme, the National Rail Plan, and with that, the order books have been ballooning. But from here on, What's the kind of opportunity do you think these companies are sitting on? If you have to look at the next, say, 6 to 8 months, what's the pipeline according to you looking at, and who could be the beneficiaries?
So again, if you look at the pipeline, the pipeline gets divided into two segments. One is on the rolling stock side. We see a tender of 50,000 wagons, 40,000 for normal wagons, and 10,000 of aluminum-based wagons should be upcoming in couple of months' time. Similarly, one a Vande Bharat order, which is in also pipeline, close to 200 to 240 such trains are likely to be ordered out. Apart from that, there is also tender of 9,000 HP locomotive, which is out there in the market. There is additional tender of 100 Vande Bharat with a tilt-based technology, which is there in the market, which should get awarded in next couple of months, could be around 6 months. Other than this, the EPC companies are also seeing a lot of order inflow momentum with the recent announcement from the PIB of 32,500 crores of new lines which would be constructed, even doubling of lines. So that is also giving impetus to APC names on RVNL, ERCON and RISE Limited.
Okay. The question that I think we should close this out with is, what should prospective investors and existing investors do? I think particularly the second group, because they've seen a significant increase in wealth. But the question is, how much of all of what we've spoken about is priced in, and have we overshot those targets? You yourself have a few targets in the space. What, according to you, should the approach be right now for those that have already bought and those that are looking to buy?
Yeah. So as far as the stock price movement is concerned, we are surely seen a very strong rise. Run up to election, given that railway is directly linked to how the election budget also happens. So you have a code of conduct which will start sipping in once the election dates are announced, which is likely to happen somewhere in the Q3 or middle of Q3 is what we expect. So if that happens, we will see some amount of order deceleration in terms of announcement may happen. It doesn't mean that orders are not going to come. Probably there could be some delay in terms of by a quarter or so, but the momentum and the plan still remains to be formed. We would suggest, for existing investors to keep on holding on to stocks for these names that you are having, because we still think the rally has still not completed.
Right.
That is how we look at this railway bunch at this point in time.
Right. So, Harshit, you've spoken to, investors who are already holding railway stocks. Now, for someone who must be thinking that have we missed the rally? And if they are looking to invest in railway names, which according to you will be the best bets, and what should be the gestation period in terms of holding them according to you?
So within what I like within the railway stock presently is a basket on rolling stock side. Within that, you can bifurcate into two segments. One is on the integrators who are actually making the entire, coach or a train. For example, Titagar Wagons is one name. Siemens is another name in this category. Or you can, look at on the component side of it, who are supplying, traction motors, propulsion system, and other equipments to these manufacturers, which includes names like CG Power, Hitachi Energy, TD Power up to some extent. So these are some names that I would want to still be active in, and also suggest to add to the portfolio, given that there is further run-up which can be expected on these names.
Okay, and that's saying something, right? Harshit, thanks so much for joining in. There's more potential run-up, according to Harshit, despite what we've seen so far this year. All right, so that was a conversation on the rail pack, and you've got some actionable insight there. Let's focus on the other stocks that have had news items out and that could react. In fact, the first one that we're focusing on is Cipla, on account of an acquisition that has been announced by its arm in South Africa. We've got Monal joining in to give you some perspective on that. Monal, 100% acquisition, I believe the amount is close to $50 million. What can you tell us about this?
Yeah, the pharma pack in entirety has been, all active due to acquisitions this week. So the consideration is almost around 400 crore rupees. It's a cash consideration for acquisition of Actor Pharma's South African, which is a privately owned company by Cipla. So this company is majorly into over-the-counter and generic medicines, and has a very set line and established line of consumer brands and niche prescriptions. Now, Cipla believes that this is going to add, and it's very much in line with their strategy of expanding their over-the-counter medicines and getting into the wellness portfolio. So it looks like a good deal, but 400 crores is for a company which has a revenue of 100 crores. Also, the South African business typically for Cipla has always been a drag since the past couple of quarters. So we need to see whether this acquisition is going to bring things at par or make them better. I was just having a conversation with Vishal Manchanda from Systematics, and he believes that 100 crore revenue is not going to move the needle significantly for Cipla. But of course, this is something that one needs to watch out for. The transaction is expected to close within a period of 3 to 4 months.
Right.
So that's about it.
Thank you for getting us the details. It's going to be interesting to see how this pans out for a Cipla this week. We already had a Biocon as well, which we've been tracking on a similar kind of a setup. But moving on, coming back to the auto space, you have Hero Moto, which is looking to invest 420 crores in EV startup, which is Ather Energy. We have Vinay standing by to get us more in terms of what's the strategy Hero Moto has with regards to entering the EV space. Vinay, over to you.
Thanks, Hiral. So, Hero MotoCorp has said that they will invest 550 crore rupees to the Ather's right issues. So, Hero Moto already has some stake in the company. It currently stands at 33.1%, and the stake is going to rise, but the exact rise in the stake will only be confirmed after the transaction gets closed, which is expected to be within this month. So reports have suggested already that this round of fundraising will make Ather a unicorn, and this could be a round of 250 million for the company. And it won't be wrong to say that this comes at a time of consolidation in the market, in the sector, because after the government accused the companies, some companies, of not adhering to the localization norms within the FAME scheme, and the dispersal of subsidies within the FAME scheme has also been reduced. So these companies have said that they face an existential threat. If we see that these companies are communicating an existential threat, and Ather and Ola, such companies are seen to be market leaders of the sector, so this might suggest that the company may be looking to gain from this consolidation in the market and looking at the growth that is out there. And the company may also look to aggressively compete with market leaders like Ola, which has recently unveiled great plans and new models, and further they have also plans of going for an IPO. So Ather might be looking to get more aggressively into the market and use this money very judicially.
Yeah, interesting points that you're raising, Vinay. I've been following the space for a while. It'll be interesting in terms of placement, right? Because if you think about it, Ola is the more mass market product. Ather has been kind of premium. The pricing of their subsequent models will be key to watch.
And the way a listed company's share in the two-wheeler EV market space increases, this is an absolute strategic move that Hero Moto has made, because the others are still trying to build their own, and here you still have a Hero which has come in and taken a stake in Ather, which will substantially rise quite a bit.
So even a 33% number was nothing to scoff at. Right? It was a significant investment. Absolutely. And they were participating. So to everybody that was a little confused about the fact that Hero did not launch its own product line, you have the answer that they were investing in Ather. And Ather, as you probably know, has been in the market for quite a while. In fact, much before Ola.
It is one of, I think it's the second in terms of market share after Ola, right?
So, but if you look at overall two-wheelers, it is only about 0.5% of the pie in July. But that number is growing. Of course, the headwinds from the withdrawal of the FAME scheme, which pushes that ticket price a little higher for people that were comparing it with the ICE to say that, look, the ticket price is more or less the same and the running costs are lower. Now that doesn't take place. So the economics of it is going to be something that will probably determine whether or not these bikes will succeed in the future. And of course, that's why I said the pricing of subsequent models is going to be absolutely critical to watch. Let's focus in on a few more stocks. We've got some brokerage notes that have come in that are quite interesting. One of them on Raymond, a couple of others. We've got Mika joining in to talk about the first few. Mika, morning. What are you picking up?
So, two brokerages have initiated their coverage on the apparel brand Raymond. The first one we have is MOTILAL OSWAL, which has initiated its coverage on the company with a buy rating at a target price of 2,600, which implies a 32% upside from its current market price. The brokerage notes Raymond's unexplored brand potential despite its rich heritage. Key drivers includes Raymond's demerger and promoter capital infusion. The company has sold its FMCG business, separated its consumer apparel from real estate and engineering, and laid out a strategy to maximize portfolio brands like branded apparel and textile. Real estate is also seen as a significant growth driver as the company aims to double realty pre-sales to around 30 to 35 billion in the next 3 to 4 years. Motilal Oswal also expects Raymond to generate a healthy cumulative free cash flow of rupees 900 crores by FY 24-25, with a consolidated revenue and net profit forecasted to grow by 10 and 19% respectively over the span of FY 23 to 25. And the second brokerage that we have is Jefferies, which has initiated its coverage with a buy rating at a suggested target price of 2,600. Jefferies states that the management has effectively addressed the debt and corporate structuring concerns by divesting its non-core assets, resulting in a net cash positive position as the free cash flow generation improves. The brokerage projects that the branded textile business could achieve high single-digit growth in the medium term, which will be driven by premiumization in the suiting side of the business and leveraging its 20,000 strong retail network. The company plans to list its lifestyle and real estate business separately within the next 12 months, with real estate contributing to 20% of FY23 EBITDA. And lastly, Jefferies anticipates a revenue and earnings CAGR of 13 and 14% respectively from FY 2023 to FY 2026.
So very interesting points there. Meka, you said that it's a lifestyle company, but then effectively it is a real estate and lifestyle company. And interestingly, we spoke to the management after the last quarter results, and what they said is that they want to complete this by the end of this year. And then interestingly, the earnings will be restated for the full year once that does take place. So certainly an important stock to watch. One of the key benefits, I think, is going to be the chunkiness that you see. Thanks so much, Mika, for that. The chunkiness that you see in the real estate space will go away for the lifestyle business, and that predictability for investors that are looking to primarily participate in that lifestyle theme will play out.
And if you see in terms of the stock price as well, yesterday we ended with cuts, but in the last 6 months, it's seen a steady uptick. The stock has seen gains of little over 50%. As well. So interesting moves, because after the first quarter results and on the back of the commentary of the management, we did see a good rise that did come in terms of the stock price as well. But moving on, a lot of other names that are in focus. Again, you have a RVNL that props up. I think Himansh is standing by to get us more, apart from an RVNL as well, the other names that you're tracking, Himansh.
Right. So a bunch of assortment across industries. So you mentioned RVNL. So RVNL, MPCC, their joint venture, they have emerged as the lowest bidder for a civil engineering's work for gauge conversion work at Vadodara division of Western Railway. Now, this project is set to cost over 174 crores, and the share of the firms in this joint venture is 74% for RVNL and 26% for MPCC. And this contract being executed over the next 2 years gives strong visibility in terms of revenue. Then you have Oil India, where the board has approved equity contribution in the joint venture with Assam Gas Company worth over 1,700 crores. The joint venture, known as Northeast Gas Distribution Company, is set to execute city gas distribution projects. Oil India holds 49% stake in the company, while Assam Gas holds 51%. Then we have LIC Housing Finance, where the company has infused incremental capital in its LIC Mutual Fund Asset Management Company via a rights issue. And a sum total of 21.6 crores have been infused into the company. Now, with this augmented capital base, the AMC can expand its operations and launch new fund schemes, increase distribution network, and also hire more skilled talent, all of which helps it to gain a more competitive edge. Now, lastly, we have Avenue Supermarkets, where the company opened a new store in Morbi, Gujarat. The total store count is now at 33, and the company targets to add 40 stores in FY24. Hence, targeting to reach about 364 stores by the end of this fiscal. Generally, we have seen Avenue Supermarkets add more stores in the second half of the year, and DMart has now lately been focusing on more larger stores, which are over 45,000 square feet and above. Now, why you ask? This is because it brings in an added flexibility. Because if you look at the last quarter results, their apparel segment was relatively weaker, but this was offset by their newly launched pharmaceutical segment, pharmacy business, which was, they were able to execute this because of the larger store formats that were there. So that's in store for all the key business updates, and let's see how the market reacts to these progresses today.
All right. Thanks so much, Himansh, for bringing us those updates. RVNL, according to me, was the stock, one of the stocks of the day yesterday. We'll have to see how it reacts today. Over 10% in just yesterday's session. The mercury is rising for these companies, certainly. But let's talk about a few more stocks. Tata Power, among them. We've got Saloni joining in with her list of stocks in the news. Morning, Saloni. What's on your list?
Morning. So as we said, first we have Tata Power. So the company's unit, that is Tata Power Renewable Energy, signed a power delivery agreement with Neosim Industry, which is a leading grey and SG iron castings manufacturing company, for a 26 megawatts AC group captive solar plant. So this 26 megawatts AC project that is located in Ahmednagar in Maharashtra is to generate 59 million units of power annually starting from March 2024. This plant is expected to reduce carbon footprints by 32,500 tons annually. So the total renewables capacity of Tata Power Renewable Energy stands at 7,800 odd megawatts, including projects of almost 3,700 megawatts under various stages of implementation. Next, we have Bombay Dyeing that settled its dispute with Axis Bank for an approximate sum of rupees 149 crore and handed over 11,500 square meters of land to the lender, which will enable independent and exclusive access to Axis Bank's headquarters. Third, we have Ramco Cements that commissioned the balance capacity of 3 megawatts of waste heat recovery system out of the 12 megawatts capacity. With this, the total operating capacity of waste heat recovery system for the company has gone up to 43 megawatts. Then we have Escorts Kubota. The agri-machinery business division of the company will be increasing the prices of its tractors effective from the 16th of September. These price increases will vary across models, variants, and geographies. And lastly, we have news on Dhanuka Agritech. So the company launched a product called Tizom. So this product is essentially an herbicide for the sugarcane crops, having an effective control on broadleaf weeds, narrowleaf weeds, and sedges, catering to the domestic market.
So it's a whole mix of sectors that you're going to track today, Saloni. Thank you for getting us all the details. But moving on, apart from these names, one other sector that has been in the limelight over the last couple of trading sessions has been the metal pack, right? A lot of news flow coming in over there, specifically if you see from what's happening to the Chinese stimulus, that is what is aiding the demand. Plus, if you see the metal index itself, that is almost, if I'm not mistaken, at a 17-month high. We have Rishi standing by to get us more in terms of what's the development that we've seen in overnight trade as well as this morning from a price perspective, and how does it augur for metal names?
So metal companies, particularly if you look at the metal majors like JSW Steel, JSPL, SAIL, as well as ArcelorMittal, they have all hiked their steel list prices. And if you look at particularly the two segments, that is flat steel and long steel, for long steel, the hike is up to about 2,500 rupees per ton. And for flat steel, if you look at, the hike is about up to in the range of 1,250 and 1,750 rupees per ton. Now, with regards to how effective these price hikes are with respect to the market, if you look at the long steel market, with the market price primarily dominated by local producers, and the product that is majorly there in that segment is rebars that is used in construction, and because it is dominated by unorganized players, they produce it at a very cheap cost at a much lower quality. So for this the price hikes that are being undertaken by the steel majors are not that effective in the market. That eventually, when it comes to selling, they are selling at a discount. But if you look at the flat steel market, it is much more organized, and that is where the lot of the steel majors like JSW Steel and Tata Steel, about 75% of their portfolio is in flat steel. So if you look at it as more or less a positive, and these price hikes are coming at a time when China is having a lot of stimulus measures that are coming out. So the expectation is also that by going ahead, the prices may be hiked even further, and eventually it will improve the margins of the company.
Right. And then with this as well, what's interesting to see is when I'm talking to analysts as well, what they are indicating is that from a valuation perspective right now for metal majors, they're pretty much relatively cheaper right now, and hence the risk reward seems favorable. So a lot of investment bets that are getting into the metal space as well currently.
Yeah. Given that we are already going into an infrastructure boom, there's a lot of infrastructure by the government and by the private majors as well. There's going to be a lot of the valuations, as you said, they're trading at a much cheaper, given the potential that they would have, given the upcycle we are in.
So that's certainly something that we will come back to you on in the coming days. But let's focus on the primary market. There's a listing lined up today, and this is Vishnu Prakash Punglia. What are the key details to watch as we head into the first day of trade, the debut for this stock?
So absolutely, it is listing today in the exchanges at about 300 odd crore IPO, and the list price was at the IPO price band was at 94 to 99 rupees per share, and it was a completely fresh issue. There was no offer for sale that was done by the promoters. The IPO was subscribed over 87 times, and it is the 5th most subscribed IPO in 2023. So that is something to look out for. If you look at the company specifically, the business that it is into engineering, procurement, and construction, with an experience in designing as well as constructing various infrastructure projects for both the union as well as state governments. If you have a quick snapshot of its financials, its revenue has had a CAGR of about 55% for the past 3 years, and net profit CAGR of over 100%. So that's a really good financials that it also has. And if you also compare it to its other listed peers that are there with respect to its valuation at its upper price band. So for Vishnu Prakash, the PE stands at 9.5 at the upper price band. Compared to other peers like RVNL, NCC, PNC Infratech, and ITD Cementation, it is in double digits, and if the average is at about 18, while for Vishnu Prakash it's at 9, so it's almost half the valuation. So the stock may see a lot of upside today when it is.
It's going to be interesting to see if we see a good debut, a strong debut on the bourses today or not, in comparison to the kind of subscription that we've already seen on the counter. So an interesting name to watch out for from the primary markets. So lots to cover, Alex, overall from a market perspective, individual counters as well. Though that sector rotation that we are seeing in the markets, that is something which we need to watch out for, because as Rahul Sharma was mentioning yesterday as well, 1,000 points rally that could be on the cards in the month of September. Whether that will happen or not is anyone's guess, but a stop loss at 19,250 is what needs to be maintained. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.